Morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, October 10th. We got just one release scheduled for today, or at least that's being reported today as the government shutdown kind of prevents a few items to be released. So today we got the weekly jobless claims, and last week we had 308,000 people applying for unemployment, and the forecast was supposed to increase slightly to 312. So we've been seeing some stuff right in between the 300 to about 308, 320 range, which is obviously great news. For us because it's been slowly declining. So here we go. But today it actually jumped up quite a bit to 374. This is going to be something we want to keep an eye on to see what's going on here because that's a pretty big steep jump that we saw with the weekly jobless claims. So let's go ahead and take a look at the headline news, and we got the stock market's currently up. It's up. Dow's up over 200 today. Why is that? A lot of it has to do with this. The Republicans came out with a possible temporary solution for the debt ceiling. They're calling for basically no strings attached extension to the debt ceiling for about 6 weeks, and then until I could try to figure out a budget that will work with both sides, at least to avoid any possible default, as neither side wants to see a default, which would kind of hurt our credit ratings and would basically hurt a lot of things. The stock market would probably tank a bit. The interest rates obviously jump up quite a bit, primarily because we become higher risk as a result. So those are things that nobody wants and would actually really hurt our economy overall. So hopefully we'll see some type of resolution with this, and obviously a longer term rather than 6 weeks. So let's go ahead and jump over and see what the bond market's doing today. And we started the day off quite a bit down. So yesterday we dropped down to 101.909. As we see, we're starting to see a pattern of going downwards, which means interest rates are rising. Currently we're up at, we're actually dropped a little further, but right now we're up 22 basis points. We're up at 101.09. So we did drop below the 101 mark, and we're in the 100 range, the high 100 range. And we're still down below where we left off. Yes, we're a good 13 basis points from where we left off yesterday. So pricing again is still worsening a little bit as we are starting to go through a correction. We did benefit as the stock market was going up, or actually when the stock market was tanking because of the debt ceiling crisis or the government shutdown. As a result, now we're starting to see some of that money taken out and going into the stock market. So this is a good, again, possible correction here. Yesterday, the minutes were released later in the day. There were notes in there that basically indicate that there could be a taper this year still, but with the nomination yesterday, as that was after the FOMC, Yellen's nomination to become the next Fed president, that could be something that could change. Janet Yellen is kind of a person that is widely believed probably take that off the table and want to see the economy grow further, even at the risk of inflation issues, which were below, to make sure the economy is on stable footing. So she's considered what they call a dove in this sense. So I would speculate that basically you would probably see the tapering off the table for the remainder of this year, and until we start seeing some further improvement in the economy before they would consider tapering or taking that off the table. All right, so again, our rates have worsened a little bit again today. We are having that trend, so we definitely want to keep an eye on, and we did drop below that, the floor. So that's something which will create a new ceiling, and then we'll have a new floor at a lower level. So we want to keep an eye on and make sure that we can sustain that and hopefully have a nice bounce backwards. But those jobless claims are something definitely we want to keep an eye on for future, as we were talking about tapering and rates. Those are going to be tied towards the jobs. Thanks for watching. Hope you guys have a wonderful day, and we'll see you guys tomorrow.